Because if the euro really is as weak as everybody says it is, and really is as crappy, and the dollar, the euro rallies then against the dollar, imagine how the Australian dollar and other true more stable economies would perform. So 60-minute measured moves, again, this is just a closer look at the two levels I mentioned. Within this measured move, we were looking and anticipating shorts to hold first. If you notice the extension, let's widen things up here so I can get it right on the extension level that we noticed. The first extension provided a free trade off of it, right? The extension level that had traded down into, once, twice, third time, provided a free trade. So if you sold the 140, 130s, we had a free trade off of it. That level failed. Ended up failing. We obviously did not break lows. Next level, we were watching the 150 level. Well, it didn't really get a great reaction. We went up and actually invalidated the short right away. We did fall off of the 61.8% retracement, and when that happens, it is sometimes a good idea to then immediately draw, and I'm going to move down to the 15-minute chart so you can see this because I believe I already have it highlighted on the 15-minute chart. I do. So when we came up and failed that 61.8% for that full halfway back short from the 134.50 highs to the 139.60 lows, we actually immediately traded all the way down to a full 50% retracement from lows to highs, and we held it. So in other words, market went up to fail the shorts, came back to fill the longs, and traded up to the long target. And that's what happens. Probably 70% of the time, I'd say, whenever you invalidate one side's trade, you immediately trade all the way to the next major level for the opposing side. They basically, up here, you had longs covering. This was just a profit-taking slide down to the level where they were going to buy it again. So you might have had some longs, reverse and short into their long, but the bulls won here. I mean, we closed the week on the highs. We're potentially going to break our previous high, which could send us up to really testing this 144, 145 area, which is where that full short is. And if we get a break there, we have the potential to validate that 178 target here, which is that's huge. I mean, we're talking now another 3,000 pips higher from where we would potentially invalidate the short. So that's why we're concentrating on the Eurodollar, because it's setting up for either a 3,000 pip rally to 178 and all-time highs, or it's setting up for a massive reversal where we would fall potentially all the way to 118. So I'm kind of we've had some fired blanks here on short attempts. We're now in long attempts, so we're going to, find this trend to take a long, which we should. We'll get one. We'll get filled at a nice, decent long level somewhere. We just got to be patient for it. So yeah. So that's what I have for the Eurodollar, and I hope you guys are getting a better understanding of this fight between bears and bulls and where we're at in this whole equation and how I trade and what I'm watching. I think I don't think I've done the Elliott wave analysis in the short time frame, but off this low, I can count this as a leading diagonal 1, 2, 1, 2, and now we're in a wave 3 of 3 up in 1, and then we'll probably take this move that's being traded. If we do not find resistance at this extension, we will trade the all the way halfway back, and we potentially could reverse it. So I would anticipate, if this is wave 1 up of wave 5 up, I would anticipate us trading into that. Move out to the hourly time frame so we get a better look here. I would anticipate us. Here we go. Obviously, I would anticipate us either breaking. If this is wave 1 of 1 up, and it could be a leading diagonal up, we'll either go to the 61.8 here and validate it, fall all the way halfway back where we'll try to get long, or we could just keep going all the way up to the short level or the invalidation level where it will fall all the way halfway back. So in terms of Elliott wave perspective, these levels are highly respected, and now we just have to figure out, okay, what is the map read? We have our compass, we know the directions, we know where we're supposed to be going. Now let's draw the map, so to speak. And I'm thinking, my opinion, we came off this low. We'll probably actually end up holding this 139.90 low. Really just call it the 140 level. Big psychological level as well. End up holding that and probably trading some kind of short setup that, for the time being, for the next 200 pips, it may be the trade to take, but the better trade would be the larger 50% long. So, we're gonna look for some counter trend setup, some shorts going into next week, because we had a great rally off lows. I mean, we had a 300 pip rally off lows for this week, and I expect the euro dollar to have some pullbacks that we could potentially fade a bit of a rally here, and then hit it hard on the long side. So, only other thing I really had to show you was on a 4-hour Aussie yen. It is holding an extension long, and it's consolidating in what could be a triangle. So we're going to use the 87 to 85, this 200 pip range, where we're going to buy the breakout, looking for 92s, or sell the breakdown into like the 82s. So that's another trade setup I'm looking at. This consolidation here for either breakout or breakdown, but we are holding a long, targeting 92s. All right, everybody, that's all I have for you today. So right off the bat next week, levels to watch, we have the 142.80 short that traded already in the euro dollar. So we do have the potential to trade from this level and fall, down to like 141s. Whatever the 50% long is of, let's go to the 15-minute chart so we can see here. We do have the potential to, and since we did hit targets, but we are kind of breaking through, we're now in a series of, so this long, we broke out of targets, so now within this long, we are in some series of measured move longs that traded an extension once. I'm willing to bet we're coming up close on a target here. Okay, so we traded an extension here. It looks to me as if I was to give you my best anticipation of how this market's going to open next week, we're probably going to open and be limit up into the 143.20, where we could potentially sell off, and then 143.20 holds, go with same anchor. Let's go to put it at 143.20 exactly, so we can get the level. So if it trades 143.20s, look for 142.13 support with a 141.80 invalidation, looking for 143.70s, and potentially taking us all the way into the 144.50, all the way halfway back short to where we could potentially trade all the way back down to 41s before back up and invalidating. So that's how I'm kind of looking and anticipating for this market to play out. So we go up to the 143, what did I say, 143.20 level, and we hold there. I think we'll actually we have the potential to sell that level, anticipating 100 pip slide into the next long. But we're going to play this. We're going to wait to see how this plays out. At the open next week. So that's all I've got for you guys. Enjoy your weekends. Happy Memorial Day to those Americans out there, and I will be back with you as price action develops.